In this lecture, we're going to be looking at the moving average indicator. Now, in our last lecture, we spoke about indicators. We learned about the different types of indicators and how they help us enter trades, how they help us identify market directions, and how they give us confirmations, okay? And we spoke about the types of indicators, the volume indicators, the trend indicators, the momentum indicators, the volatility, and so on and so forth. Now, this type of indicator we're about to look at is called the moving average indicator, and it's a trend indicator, okay? It's one of the most widely used indicators in the Forex market, and it's one of the most efficient indicators in the Forex market. Now I'm on trading view, so I'm just going to go on indicators and then come and search MA, just type MA or moving average. Now this is the moving average, so just click on it. Okay, when you click on it, it then adds the moving average to our chart. Now this is the moving average on our chart. Now the moving average is simply an indicator that plots a line on our chart based on the average prices of a selected amount of periods or a selected amount of candles. Okay, so we could have 10 candles or 10 periods. So it's going to plot this line based on the average close prices of those candles. Remember, we learned about open prices, close prices of a candle. Okay, so now this indicator plots the the line based on the average close prices of the certain selected periods. Okay, so let's just click on this indicator. Double click on the indicator to bring out the options of the indicator. Okay, these are the options for the moving average indicator. Now here you can see time frame set to chart, so it means it's going to show the indicator based on the time frame we are looking at, okay, based on the particular chart we are looking at. Okay, now where you see length, this is now the period we're talking about. This is the period. So when we select higher periods, it means it calculates the prices based on higher candles. So for now, it's calculating it based on 9 candles. Okay, so where you see sources, now as you can see, it's here on close price. So it means it uses the close prices of these candles to plot the line. Okay, to plot the line. Then we have the low, the high, the open, but just stick to the close price. So let's just make this 20 period. Now, after making it 20 period, we see that it then becomes smoother. It then goes a little bit away from the chart, okay, from the chart. That's because we've chosen a higher period. We've chosen a higher period. So we are kind of looking at a bigger perspective of the trend. The smaller the period, the easier it reacts with the price. The easier it reacts with the price. Let me just add another indicator, another moving average indicator, so you see what I'm talking about. So let's make this MA. Let's just type MA, moving average. So let's change the color of the new one. Let's go to style. Make this red. Okay. Now, after making it red, we tend to see that this one has 9 periods. Okay, it has 9 periods, while this one calculates based on 20 periods. So we have 9 periods and 20 periods. So you see that the bigger the periods, the more away from the chart the indicator is. So the closer the periods, the closer it is to the chart. So if we make this 1 period, we tend to see that it's going to follow the prices very closely. Okay, it tends to follow the prices very closely. So that's one thing you have to know about the moving average indicator. Let's just make this 9. Let's make it 9. Let's take it back to 9. So like I said before, shorter periods indicators or shorter periods moving averages tend to show the direction of the trend in a shorter time frame, or kind of in a shorter period. Okay, while the higher period moving averages tend to show the direction of the market in a higher period. So that's what they do. Now, how do we use these moving averages to trade? How do we use them to trade? So let's just turn this 9 period to 50 period moving average, okay? So when we make it 50 period, we tend to see that it expands more, okay? So the way you typically trade with the moving average is traders usually assume that whenever the prices are below the moving average, it means the prices are in a downtrend, okay? The trend is low, or it's a downtrend rather, and then when prices are above the moving average, or when prices trade above the moving average, like how they're doing here, we see that the market is in an uptrend, okay? So these moving averages also tend to help serve as support and resistance levels. As you can see, the trend made a high here, and then made a low here and higher high, and then this lower high got some support on this 20 period moving average. It got some support and then shot up, and then if you can see, this other one got its support here and continued up, and so on and so forth, and so on and so forth. And then when they broke this moving average, we see that the trend changed into a downtrend, and then it started making lower lows and lower highs. Okay, so this can give us a guide. And some people tend to use the cross of moving averages. So there are a lot of strategies that you can create, that you can follow with the moving average. For example, some would say that whenever the 50 period, or let's say whenever the 20 period moving average crosses above the 50 period, okay, we buy. So some traders might buy. Okay, sorry, I just mistakenly deleted the moving average. So this is 50 period, I guess. Okay, sorry, this is 20. So I'm just going to add the 50 period again. I'm going to edit the color. Yeah. So like I was saying before, some traders will say when this one crosses above this one, they buy. Then when this one crosses below this one, they sell. And if you do it that way, if you follow that way, you tend to see that it might give you quite a good win rate. Okay, like for example, for a buy trade, we might want to enter a buy trade at this point. So let me just use this too. So we might want to enter a buy trade at this point when the smaller moving average crosses above the larger period moving average. So you can just enter a buy trade here based on this strategy, of course, this moving average cross strategy, and then you could have your stop loss at this point that's below this level here, this level. Then you could have your take profits like 2 times or 2.5 times or even 3 times your stop loss. Okay, and as you can see here, the market actually bought. Okay, the market actually bought and then give us this profit. So this could be a strategy that you would want to follow. There are many traders trading like this. Okay, so my advice would be that you don't just follow the moving averages blindly, because of course I told you indicators are lagging systems, so they won't act very quickly. They'll give you late signals. Okay, so you might want to use them as confirmations, or you might want to use them to follow the trend. So let's say we want to enter a sell trade at this cross. So we might be entering here. So let's assume we use our stop loss. We put our stop loss above the previous high. You can see that the market continued selling and even made the market continued selling and even made way more than 3 times our risk. So that's one way of trading with the moving averages. Some traders would just use this, okay, and then probably use another indicator, maybe an RSI or an MFI, that's the money flow index, to look for overbought and oversold regions. Some might use these indicators and then use something like the price patterns, okay, something like price patterns, like as you can see here, we have a double bottom, and then some traders might say, I can remember using this strategy severally, okay, to grow my account. So I tend to look for a double top or a price pattern, and then look for the indicator. I don't even look for a cross. For that strategy, I wasn't looking for a cross. I was just looking for the indicator. I was just looking for prices to trade above the 50 simple moving average, and then I will then look to buy. Okay, so the strategy was that when I see a double bottom, okay, when I see a double bottom or any type of price pattern here, and then I then see that that a candle like this, okay, opens above this simple moving average and then closes above the same moving average. That's all I look for. That's all I used to look for. So I'll just wait and see if we have a double bottom or a triple bottom or whatever price pattern we have here, and then the candles open above the 50 simple moving average and also close above the 50 simple moving average. So I'll just enter a buy trade, let's say, on the next candle, and then my stop loss was usually below the lowest point. Okay, so this would be the lowest point. So my stop loss will be just probably at this point, okay? And then I wait. Now I'll target at least 1.5 or 2 times my risk. And as you can see, with this trade, if I had come out here at this point, I would have even made more than 2 times my risk. I will have made 2.93 times my risk. And we can see that the market even kept going up. The market even kept going up and even reached this point. So for a sell type of trade, I will usually wait for a price pattern again. Okay, I will usually wait for a price pattern. Okay, so in this point, at this level, I think I can see a double bottom. So for here, this could be seen as a double bottom. So when I see something like this, I also wait for prices to open and close below the 50 simple moving average. So if the prices open and close below the 50 simple moving average, I will now enter for a sell. And as you can see, the market kept trending and we made profit. This is another place you could enter. For here, I think I can see, okay, a double top or double bottom or triple top. Or maybe we could even draw a trend line like this. So this could be it, and prices broke and continued selling. So guys, that's it for this lecture on the moving average. We could also load the moving average on our MT4 platform. For example, when we come on MT4, just come here, indicators, and then trend indicators, just moving average. You can see it has period, and you could maybe leave it at 50, and then method, simple, and apply it to close. Okay, so this is the color, and we can make this, we can make it this thick, and just okay. And of course there are different types of moving average. Again, there are different types of moving averages. We have the exponential, we have the smoothed, and we have the linear weight. But I usually just use the simple moving average. You could explore the others if you want, but I usually use the simple moving average, and the simple moving average can actually give you all you need. So that's it for the simple moving average indicator. The next lecture we're going to be looking at other indicators, and hope to see you there. Bye.